Let's move on. I want to talk about quickly about how much EV car makers lose in credits because things have changed. The National Corporate Average Fuel Economy, or CAFE, standards are still in place. However, penalties for violating these standards have been removed. So obviously, there's no incentive for any car maker to abide by them.
Yeah, and if you look at the National Highway Traffic Safety Administration, that's a mouthful, they're focusing on standards to try and make cars more affordable again. But the big EV car makers, I'll call them the big three, which is Tesla, Rivian, Lucid, well, they will have some difficulties. The credits were tradable, and the EV car makers were making a lot of money selling the credits to car makers who were not meeting the required standards.
Yeah, and Tesla will probably be okay. I mean, they're the big one, but I think their stock could be at risk because of credits. I couldn't believe this, have amounted to $12 billion in revenue that they've received from the government since 2008, and that essentially, that's pure profit. There's no cost to it all, just given to them. In the most recent quarter, Tesla said a loss of revenue, credit revenue, reduced revenue by, and this is a quarter, $1.1 billion reduction in revenue.
Yeah, and profit.
Yeah,
So, I mean,
exactly,
that's the bigger issue. Is
Yeah.
like you're talking about it because again, you're not producing any more cars to get that revenue.
No.
That is just what you've already done, and you're getting that on top. And the reason they were benefiting, I kind of looked at this, but it looks like the CAF rule. I'm going to call it that. CFAE rule. The goal was to have a 50.4 mpg by model year 2031. So all the automakers that weren't above that standard, that's why they had to buy these credits. And again, I think that's just silly in my opinion, but I mean, it's been a huge benefit, as you said, to Tesla. Rivian, another one. And their stock price in May finally showed some sign of hope, trading above 16 a share. That has now dropped back down to somewhere around $12 a share. And they said they had received over $400 million in revenue over the years, and the credits accounted for 6.5% of the total revenue in the first half of 2025. I can't even imagine what this company's losses would be, because again, they're not making profits,
Right.
if they didn't get that $400 million. I
Yeah.
mean, it's a huge problem for them. I gotta say, I mean, with the loss of these credits and the lower gas prices, Rivian could have trouble staying afloat in the future years.
Well, again, we talk about the big three EV makers, Tesla, Rivian, and then the last one is Lucid. And they'll probably be hurt probably the most. As they said, credits represent a significant amount of their revenue. I have not looked at this company recently, but I still believe their balance sheet looks risky, and this could be the final nail in the coffin for this business. A couple of years ago, the stock was trading around $4 a share. It's now trading just above $2 a share. I'm pretty confident this company is headed to the graveyard here. I mean, it just, without those credits, they have, well, they have no profits now. They're going to have less, they're going to have bigger losses.
and people were interested in maybe funding these companies because of the potential for credits, because of the potential for profits. Now with this and less excitement around EVs, who is going to be left to do the funding rounds?
Right.
The pool is shrinking, which is giving them less capital. And once you run out of capital, game over.
Yeah.
The winners in this situation, legacy automakers that were buying the credits. GM, for example, has spent $3.5 billion since 2022 to purchase these credits. Complete opposite of Tesla, right?
Yeah.
Tesla was a pure benefit to profit. GM, it's a pure cost to profit. It's just a check that they have to write every single quarter, every single year to make sure they're getting these credits. So, I mean, that should be a nice benefit to, I'm going to say probably GM, Ford, Stellantis, those legacy, the big three legacy automakers.
Again, I believe people should be able to get what car they want, EV or ICE vehicle, whatever you want. But it's just, I think the EV makers having a hard time. Gas, not here in California, unfortunately, but across the country. Sometimes I've heard it's like $2.50 a gallon. Why would you go out and spend extra for an EV car?
I mean, I still haven't done it even with gas prices here.
Well, yeah, I mean, gas prices, I think I paid for, I get premium now. I think $4.60 I think I paid for premium. But, yeah, better than.
My Suburban is costing quite a bit to fill up, but, you know.
You're going to have all those kids. You got those kids. You got to have that family van.
Exactly.